prices are up, inventory is up, homes are flying off the shelf like it's Black Friday at Best Buy, and then the global markets are getting rattled by tariffs and whispers of inflation start creeping back in. Yo, but the housing market's like, I'm fine.
But is it?
In the Oklahoma City real estate scene, we're seeing price jumps, we're seeing faster closings, we're seeing more listings, and the numbers were giving mixed signals across the board. So yeah, it's either this is the calm before the storm or this is the storm. We're gonna dive into all of the most recent stats, and if you stick around, you're going to know where the local prices are actually heading, why some sellers are cashing in fast while others sit around, and how the national market pressure, including these tariffs, are going to affect our Oklahoma City real estate scene. This is not guesswork, this is data decoded with strategy that you can deploy for your own personal gain. Let's jump into it, the April Market Report. All right, let's kick things off with a big picture view of what the Oklahoma City real estate market's doing. Looking at our months of inventory, which this will indicate if we're in a buyer's, seller's, or balanced market, we are at 2.73, which was just over a 1.1% climb over last month. So yeah, we are still firmly in a seller's market. As you know, we would need 4 to 6 months of inventory to be a balanced market. Anything north of that is a buyer's market, south of that is a seller's market. So we've been hovering around here for the last several months, and that's a good thing if you're a seller. Obviously, that's something that you can use to your advantage. And even if you're a buyer, you know, we're seeing more buyers having time to negotiate, and if they have the right strategy, really win. So think about that, whether you're on either side of the transaction. Our sold to list price has also been hovering right around 100% for the last several months. Even though we dropped 0.4%, we're still at 99.9. You know, that just shows that sellers are still getting close to full asking price on average. If we look down to our median days on market, this one took a tumble. This is great news. That means homes are selling faster. So a 10-point drop over the month prior to 26. That is huge, man. I love that. So well-presented and well-priced homes are still moving rather quickly. And then here's another big one. Our median sold price climbed 6%. We are at 265. That means sellers are clearly benefiting from the buyer demand, which obviously that sustained buyer demand is fueling this market. And then for buyers, every month you wait, it's gonna cost you, and that could mean thousands over the life of the loan. So if you're waiting for things to come down, or if you think, you know, we're in a market crash, we're not, we're in a market correction. Rates aren't gonna go down to the 3s, 4s, or 5s anytime soon. So don't use that as something to justify your wait. If you gotta wait, then wait, man. It doesn't make sense for every single person to buy, but if it does make sense for you, then, you know, just keep that feather in your cap, so to say. But yeah, man, so still in a very tight seller's market. Homes are moving fast and selling for close to asking, and prices are climbing at a solid pace. Gotta love it. Here we go, median estimated property values. So for last month, and you know, I love this card because I love data and I love visualizations and I love information is beautiful. Shout out to that channel or organization because y'all put out some real pretty graphs and charts and stuff like that. Anyway, median estimated property value, we are at 242.25. That is a 0.3% jump / climb from last month, and we are up over 2% year over year. What's all that mean, man? What does that mean? So this is just a very great indicator of overall property appreciation. It doesn't just affect what's sold, it is going to correlate to everything, whether it is sold or not, just property values as a whole. So appreciation is strong in Oklahoma. So for sellers, this steady climb reinforces that your equity is also growing, especially if you've owned your home for a few years. You know, those who bought in the pandemic all primarily have a 6-figure equity hold at this point, which is phenomenal. But this also shows that if you are basing your value off last year's comps, that you may be undervaluing your property. So make sure that you're either working with a knowledgeable individual, or if you're doing it on your own, that you're pulling very, very up-to-date data. And buyers, man, this should give you confidence, right? This should give you tons of confidence. You are not buying at the peak of a bubble. You're entering a market with slow, healthy, long-term appreciation, which you've got to love. Little bonus perspective. Over the last 12 months, this metric has climbed consistently. No wild peaks, no crazy valleys, and that is exactly what you want. That is a sign of a resilient market with solid fundamentals. Okay, so let's look at the new listings as we are firmly in the spring surge. Our number of properties that hit the markets was up a whopping 45%. So yeah, major spring inventory surge, 1,545 new listings that hit the market all across the metro. But actually not the metro, all across just Oklahoma County, because that's what we're using. No gerrymandered maps here. But that's a huge jump from February, 45.1%. Mamma mia. Although the median list price did drop 1.5%, so that was down. We're sitting at just under 290K. Our price per square foot also rose about 4% to 168. Steady climb, gotta love that. 1,800 median living area square feet, worthless card. So what's it mean? Sellers, I'm gonna talk to you first. While the number of listings has shot up, the median list price dips ever so slightly. So that tells us that, some sellers are trying to stay competitive out of the gates, especially with more homes coming online. Now buyers, this is super encouraging. More options plus a slightly softer list price is going to equal a lot more negotiating power for you. That increase in price per square foot, that means that smaller mid-range homes are going to be getting bid up, especially if they're move-in ready. So overall, this is a pretty seasonal inventory build, and it's a good thing for both sides. Sellers, remember, strategy matters 100%. With more inventory, you need to stand out. You got to be priced right. You got to have a good marketing plan, blah, 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 blah. I harp on it a lot, but this is all good stuff. Let's keep on cruising. Active listings for March 2025. We were at 2,471, which was a 1% climb over February. Again, we are on a steady climb. So we closed out March with 2,471 active listings. That is a 1.1% increase over February. So while new listings came in hot, the total pool of available homes did not explode, and homes are still turning over pretty quickly. Our median list price also climbed 7% to just under 325K, which is pretty high. I mean, that's a 7% jump, which, as you see back here, that is pretty stark from where we were in December of last year to now. I mean, from 299 to what the hell are we at? 325? Man, rock and roll. Our median days on market, that's dropping down 12%, which is very indicative of what happens in the spring. If you've been following this channel, you know that I talk about the seasonal decline in the winter time around the holidays, as is made evident by our lovely chart here. But we are on the way up, my friends. So median days on market is down to 45 for the active listings. In fact, this median days on market drop of 12%, that shows us that well-positioned homes are still moving fast. The 7% spike in list price does show seller confidence. Sincerely, beware of overshooting that mark. Today's buyers are very sharp, and if you overprice your house, it will sit. Buyers, this combination of more inventory, boop, boop, and fewer days on market, boop, boop, that shows that demand is still strong. You got more homes to choose from, but you cannot sleep on the ones that you like. So be ready to act, especially if the home is turnkey, priced right, hits all the metric of the trifecta, the buyer's triangle. So it's a great moment for both sides. Strategy wins. Make sure that you got a good one going into it. If you need any help, let us know. Let's go down to new pending listings. We had 1,082 properties went under contract last month, which is 32.6% over February, which again, peaks, valley, peak, valley, peak, valley, peak, valley. Here, let's ride that peak to the top. Huge jump, man, 32.6%. So spring buyers, you're out in full force. Our median list price was up almost 2% to just under $260,000. Our price per square foot, where we at? 156, also a little bit of a climb month over month. Then again, one of the more telling facts here is our days on market for pendings was at 18, which is a cool 33.3% under February. That's a whopper. Woo! So what do you got, man? You got 2 weeks if you're a seller on average, just over 2 weeks for that home to go under contract. If it's priced well, if it's in good condition, and if it is in a good location. Let's go ahead and for this, let's talk buyers first. So the buyers, this is your proof that serious competition is back, baby. Homes that are going under contract 33% faster than last month, and the median time to pending is just 18 days. So yes, buyers, you gotta be quick. Make sure that you're pre-approved when you go out. Make sure that you are looking at things within your budgets. Keep in mind that buyer triangle. Very rarely are you gonna find something that hits all three of those. And if you do, act fast on that, because you probably won't have time to go home and sleep on it. For another buyer with a same triangle, maybe in that headspace and say, yo, I'm not sleeping on it. That house gonna be mine. So just keep that in mind. So sellers, yeah, man, activity is strong. If your home is clean, if it is showing well, if it's in a good area, all the things, expect some early offers. 18 days depending is a great metric to enter our spring with. And that's one that, I typically tell my sellers that I represent that first 14 days is the most critical time to get your highest and best offers. So if you're overpricing even marginally in this market, you're going to miss that first 14 days. So first impressions matter. So make sure that when you hit the market, you've got everything that you need, that you're coming in strong. No marketing is better than bad marketing. So don't rush it. Don't rush it. Another thing to point out on this, our median list price at $259,950 is lower than our active inventory at $325. So that does tell us that buyers are still gravitating towards affordability. This segment of the market, this sub 275, is red hot right now. And these are the homes that are going pending the fastest. So if you're selling in that price range, man, good to be you, lucky you. So they really should call this all pending listings, not just pending versus new pending. Might clear up some confusion. What do you think? For all pending listings, we were up 12%, a little over 12% to 1,273, coming out of our seasonal decline, showing that contracts are stacking up and momentum is strong. Our median list price did fall 1.5% to 265.9, and our median days in markets, that also fell 30% to 22. Woo! Median square feet, steady 158. And then the living area, I hate this card, but our total volume, we were up 10% to 440 million, which is great. Even though prices in this segment dipped a little bit, the speed in which they sold was staggering. So that's great. 29% drop in that median days on market tells us that homes are still flying off the shelf when priced properly. So while the average pending price is down slightly, the pace is up. So that's a win if you're pricing it competitively. Buyers, this is a sweet spot. You're seeing some price softening in this pending batch here, but with more inventory overall, you may have some better negotiating power. But don't you dare mistake this dip for weakness. Contracts are still moving fast, so speed matters. So this is kind of where the market is starting to balance out a bit. Prices are leveling off, but contracts are flowing. A great time to be active if you are strategic. One of the more telling cards in the batch, this is our sold listings for last month. So we had 807 properties that had sold, which is a 20% climb over February, closing out at a median sold price of $265K, also a 6% climb over February. Our sold to list price was down slightly at 99.93%, with our median days on market sinking 10% to 26. Spring is here and closings are following that usual kind of seasonal uptick. So for sellers, this is your green light, man. Check this out. Prices are up, speed is up, and homes are selling for just shy of list price. I mean, what more could you ask for? This 6% upswing in price is pretty serious momentum for 1 month. And buyers are stepping up with some strong offers, especially in that sweet spot of between 250 and 275. And speaking of buyers, this really just confirms a lot of the data that we've been talking about. The best homes are moving fast. Where we at? Best homes here, boom, lots of them. Moving fast right here, boom, moving fast, and still commanding full price. So this $265,000, man, this is now the benchmark. So if you are shopping below that sub 265, you're gonna have to be aggressive. And if you're shopping above that, also be prepared because competition is fierce. So this sold data, man, this is like the proof that's in the pudding. This is the pudding right here. All of this. This is the pudding, no doubt. Demand is real, boom, bang. Activity is strong, waka-cha. And the numbers support both sides if you're sharp and ready, right? Whether you're buying or selling. Good stuff. All right, let's finish out with our month supply of inventory, shall we? Inventory inched up slightly to 2.73 months, which again, just a hair over 1 point over February and a whopping 19% year over year. So sellers, don't panic about this little increase. We are still very firmly in seller's market territory. And as we've seen with the sold data, homes are moving fast and closing near full price. But this does mean that buyers have a little more choice, and that makes your presentation, your pricing, and your marketing all the more important. And buyers, you got a little bit more breathing room than you did a year ago. And if this trend continues, then you're gonna have even more leverage heading into summer. But do not confuse more listings with less competition. Demand is still strong, and the good homes, man, they're gonna go quick. Again, these metrics show just exactly where the market is starting to balance, but we are not there yet. I like to say that it's competitive with options, which honestly, that's the best kind of market to be on, regardless of which side of the transaction you're on. And while we're here, let's just look at the public records, because this is like the redheaded stepchild of any of these cards. I don't know why NAR decides to put this on these data sets, but why not? We're here, so let's do it. So these sold public records are for anything that did not go through your standard retail channels, such as the MLS. So these are off-market wholesale deals, investor deals, for sale by owners, anything that didn't hit the retail market. We did have quite a lot more over last month, which last month was just pathetic. There was like 2, something like that. So I don't know if they just weren't recording them. The guys at the county just had the day off or what, but we were up 46%. We had 508 properties. Median sold price was a little lower, 2% lower at $210K. Our median price per square foot, that also fell to $144. Homes were a little bit bigger, and our total volume did climb dramatically to 141 million. Now, what all that says is people just weren't doing as much in the winter. That's it. There's no real stuff there. So investors, cash buyers, wholesalers, this is all for you, man. Volume surged, boom, bang. Prices ticked up, boom, bang, boom, bang. And smaller homes were still changing hands in big numbers, man. So if you're in the investment game, that sub $225,000 market is moving, you know what I mean? And obviously a lot of people that are into flips or buy and holds, that their buy box is usually sub 150, not 225, but I digress. So public sales rising this is just a good signal that there is some pretty strong activity on the investor side, and that always sets the tone for value perception in the broader market. So what's the bottom line in the OKC real estate market? Inventory is rising, but yes, it is still tight. Homes are selling faster. Prices are pushing up across all categories. So if you are thinking about selling, don't wait for the summer crowd. The serious buyers are already out there shopping, and they are moving quickly on homes that are priced and prepped right. And if you're a buyer, this is really your moment to act before these prices start pushing up further and competition ramps up even more as we get into summer. If you need to know what's going on for your particular situation, all of our contact info is down below. Give us a call, book a time on our calendar. We'll be happy to go over what your options are, and know that it is backed by data. If you are watching this and you are considering relocating to Oklahoma City, check out this video here. We go over some of the pros and cons of living in the great state of Oklahoma. And as always, if you don't mind, click this subscribe button. I would love to see a lot more of you on here, and it justifies the hours and hours that I spend editing these videos. All right, until next time, be good to one another.